so I'm going to give everyone just a couple minutes before I start asking the lovely panelists some questions and kind of do a little housekeeping as people roll in. Well, welcome everyone to our second event for Profitability Engine Radio. I'm Lauren Hawthorne, and I am guest hosting the webinar today. I will be interviewing Drew Lyon and Kristen Westberg, both in the studio. You both look amazing. Great lighting. Love it.
Thank you, Lauren.
I'm just on my Zoom, so I'm actually going to go off. I'm going to go off camera because you guys just look so much better than I do with my virtual background. So,
do you like that? I've been practicing.
I can tell. Like I need to up my game right.
Our topic today is money saving tips for SMBs. I picked this topic because I've seen a million articles out there about inflation, possible recession looming. So what are some ways that we can save money as a small to medium-sized business? So I'm excited to have our guests who are both CEOs and both fractional professionals who have worked with many different companies and industries. So one last thing, why did we at Focus Energy call this the Profitability Engine Radio? Well, you may have heard of the revenue engine, which is typically sales, marketing, customer success. When finance, accounting, operations are integrated, we call that the optimized profitability engine. And we actually have representation from both the profitability engine and the revenue engine with us today. So Kristen, can I have you introduce yourself to the group, please?
Absolutely. Hello, I'm Kristen Westberg, and I am the CEO of House of Revenue. At House of Revenue, we work as fractional chief revenue officers and chief marketing officers to build and create the revenue engine, as Lauren so aptly described. We are typically helping second scale companies and CEOs and executives at those companies to scale their revenue profitably, usually 2xing, 3xing in the course of 12 months by evaluating all opportunities across branding, marketing, website, your sales, customer success, and revenue operations. Prior to becoming CEO at House of Revenue, I had the privilege of being the revenue leader for Fortune 500 companies, for SMBs, for B2B, B2C models, selling products and services, and have experienced all ebbs and flows of the market and the life cycle of the business, from centralizing, decentralizing, from opportunities to scale aggressively to managing every penny in a cautious fashion. And so I feel like I've lived through it all and can talk about how to continue to refine and enhance and optimize your revenue engine, no matter what your cash flow situation is.
Thank you, Kristen.
Awesome. Drew, you're up.
My name is Drew Lyon. I am CEO of Focused Energy. We're fractional finance, accounting, and operations. Really, where are you? Where are you going? How are you going to get there? Really looking at all aspects of a business, in particular, cash flow, financials. What are the numbers? What's they're telling? How do you do what you do? In operations, just to clarify, people, process, systems, and accountability, communication, and alignment. Really easy to say, hard to do. Ultimately, we're working with our clients on a long-term basis to really partner and drive them.
Awesome. Thank you. Well, audience, this is your chance to pick the brains of these two executives. So I wanted to leave the Q&A box open, or the chat box. I'm sorry, the chat box is open. So please feel free to put in questions whenever they come, and I will relay them to the panelists. All right, I'm going to go off camera and I'm going to be asking our executives some questions. All right. So Kristen, I want to start with you. As a CEO who has worked with many CEOs, would you discuss the role of the CEO in creating a culture of just financial responsibility in general? How do we help spread this across our teams?
It's a great question, Lauren, and it's so specific within the revenue organization, because every dollar we spend, every minute we spend needs to tie back to revenue growth and profitable revenue growth. Speaking specifically about how we embed that culturally within inside a business, there is a delicate balance here. We want every team member to act responsibly when it comes to fiscal management, when it comes to how they are spending the company's dollars and their time. But there's a balance between creating fear and anxiety and trepidation about being able to take risks. It's so, so important that, for your business to thrive and grow, that your employees feel empowered to come up with off the wall ideas, to take those risks, to capitalize on opportunities. So it's up to us as CEOs to ingrain a methodology and a process for that encourages growth and encourages risk, but balances that with, paying attention to how, calculated risk, paying attention to how that investment is going to impact revenue. And I think, I've been through, like I said, all of it. And there's a couple things that stand out to me in my history of like moments when I really, really learned, how do I do this inside of a company? How do I, as a revenue leader, as a department leader, make sure my team, make sure I am acting fiscally responsible? So, I've been in situations where, any $100 we were spending outside of budget needed to have a pro forma attached to it. There needed to be some thought process around how that investment was going to be driving revenue. And so whether that's actually lead gen or revenue generating activities, even if it's people, even if it's motivating your employees, things that are for your team members, when you believe in the surface profit model and the chain of engaged team members and employees, create incredible experiences for your clients, and that drives long-term sustainable revenue. You have to be thinking about that. And, there is a delicate way to do that where everyone feels empowered and feels like they're acting like an owner and are properly motivated to behave that way, but still create a really fun, really risk-seeking and growth-driving environment.
Excellent. And you had kind of mentioned that, communication is such a big deal for all of this. And I think as someone who is not a CEO and I am an employee, I think that's just key. It's like, hey, we're in a fiscally difficult, challenging time right now. And if you guys are just all on board with helping us out but here's what we're doing to fix that issue, I think is so huge. Yeah. Thanks so much. And Drew, I kind of want to go back to the basics a little bit. As a fractional CFO, I've heard you speak before at events about how companies don't always know what their cash flow even is, or it's not very accurate. What is the importance of making sure that your numbers are right in order to budget and plan for the future?
Yeah, so accurate numbers tell a story. And the story that's told is only as aligned to the reality of how you operate as a business if they are accurate. If they're not, they're going to tell a different story. And when that story comes out, if you don't have accurate numbers, you're going to be managing the wrong thing. You're not going to know where you are. And when you say, hey, we want to be over here, you're not going to know how to get there. You're not going to know what to focus on. So having accurate numbers really enables the ability to prioritize, identify what's wrong, make people accountable, define what good looks like. It's really simple things that oftentimes get overcomplicated, and most businesses don't know what their cash flow looks like. The key is also understanding what's in and out of your control. There's a lot of things that are in your control. Certain things are out of your control. And you might say, well, this is in your control. But like, how effective is your marketing? Are customers coming through? How quickly are deals closing? Yes, that's in your control, but ultimately, like, that depends on a lot of outside factors. What's in your control is how often are you paying AP and AR? What are your payment terms? What's the scope that you're engaged with? What's your staffing model? How are you looking at numbers? Like, all of these things can greatly influence cash flow and help you manage it more effectively. And using and having accurate numbers, I'm not talking perfect. No numbers are ever going to be perfect. Something's always going to be a little off, or you could be a little better. Good enough is good enough. The reality here is you want the story to be accurate so that you know what's working, what's not, what to prioritize, and who's accountable to fix it.
Yeah. Awesome. So say, okay, I hire a very good CFO, or my numbers are right, my controller has it together, my accountants are amazing. What are some common expenses that should be considered, Drew, when looking to save money? Obviously, we know about the embracing the remote work thing and not having an office expense, but what are some other cost-cutting measures people could be taking right now without taking away from the business?
Some big elements here are you holding too much inventory? If you're an inventory-based business, when we think about aspects of where to save money, if you're putting all your money into inventory and you're holding too much, it's going to be a super inefficient use of capital. So I'm not talking just-in-time inventory. If you can do that, great. Most businesses can, especially with supply chain issues. So managing inventory spend, also really looking at staffing. And yeah, you could look at different staffing models, fractional, super effective, or looking at, part-time. I'm talking about, are people getting their jobs done? Do you have a lot of staff and things aren't happening? Do you have true accountability? Making sure that how we're spending money and it's producing a result. Is it the right result? Is it the wrong result? Like, I think we've all been in that chair of asking, like, is this good? Is this bad? Like, that's a huge area. Another thing, like some of the simple stuff, looking at like rent, dues and subscriptions, income taxes, getting a good advisor to say, hey, like the business income tax or even your personal income tax can be optimized in massive ways that most people aren't aware of. Rent, like, well, we have to have the office. I mean, do you? Like, we've got Skype, we've got Zoom, we've got Google, we've got Teams. You need as much space as you have. Can you split the office and have somebody else come in and offset some of that expense? I've seen too many businesses that have a giant office and they barely use half of it. Dues and subscriptions, are all the things being utilized? Do you have a bunch of subscriptions that no one's using, no one's looked at? Those things add up very quickly. And I think really looking at that and saying, who's accountable for every dollar of spend? Yeah. I'm not talking about like being draconian, slamming your fist on the table, but it's creating a culture of that fiscal accountability means understanding, why are we spending and what's the outcome?
Yeah. And I think there's some really good points in there too, especially around dues and subscriptions. Oftentimes we see inordinate amounts of money being spent on tech stacks, on technology, trying to create automation and leveraging software to, produce more automated, business processes. And a lot of that can be great. A lot of that actually does work to create more efficiency, allows you to save cost in other areas, allows you to get to your outcome faster, et cetera. But it does need to be evaluated. I think too often businesses make the upfront investment and maybe go through a rigorous process upfront to evaluate and determine how it's going to fit into the business, what that ROI is going to look like. But do they continuously monitor it? Do they continue to look at it and ask, do we need this? Do we not? Is it delivering the results we expected it to deliver? Do we have enough people using it? It's all those questions. And I do think oftentimes there are alternative solutions that, can achieve, the desired result without such, significant expense.
I think that's it exactly. You really hit it on the head. How are you looking at something continually? How are you managing that spend? Because a lot of groups do look at the spend and they're like, what's going to happen and here's how it's going to occur. Best laid plans ever.
Right.
But then they forget about it and they come back. It's like, well, what was the intention here?
Yep.
How did we know it was on track? And I think that's discipline. That's how you get results.
Yeah, for sure.
Yeah, excellent points. I will say, I think we'd be pretty sad to lose the podcast room if we got rid of our office. You both look amazing.
This is a lot of fun.
Yeah. So Kristen, another solution, I guess, to saving some money as a business is obviously, hiring outsourced professionals. But what are some of those benefits of hiring an outsourced or fractional professional as a cost saving initiative? Does it actually save you money? Do they actually help you get more money? Can you talk about that a little bit?
I think so many businesses, when they're, scaling, and when they kind of get past startup and they're really, their product or their service has been tested by the market, it's been validated and they're continuing to grow and they're transitioning through these different stages of growth, there reaches a point where the balance of working on the business and working in the business becomes really difficult. You can be so reactive to all the things, all the noise, everything that's going on inside the inside the organization, whether it's client issues, people issues, breakdowns in your processes, operational issues. All of that can be very distracting and can consume the attention of your leadership, where you get stymied. You're really focusing on solving problems and you're working in the business day to day, and nobody is stepping back to look at how is the market performing? What are our competitors doing? How are our clients reacting? What is evolving here? What do we need to adapt to? And that can be a total death sentence for businesses, and they get stuck. And so what we found, and kind of our purpose and mission when we come in as fractional executives, we really have a good grounded process that allows us to be the ones working on the business, be the ones answering all of those questions, looking ahead, paving the way for the future. And I do think, businesses that leverage fractional executives get that benefit. They really get the benefit of somebody that is not biased, somebody that's not in the trenches day to day, that can help keep propelling the business forward, that can ask the tough questions, that can keep a clear head. And it is also, a cost savings measure. I mean, a lot of businesses, depending on their growth chapter, can't afford to pay a full-time package for an highly experienced chief revenue officer, chief marketing officer, CFO, chief, financial officer, chief operations officer, et cetera. I mean, that can tax a business tremendously. And then you're also drawing upon that one individual's breadth of experience and knowledge and network. And, companies that do use fractional executives, especially businesses that provide fractional executives like ours, where it's not just one person who's out there with their limited set of experience marketing themselves or offering themselves in a limited time frame or capacity. Our businesses have taken years to cultivate proven processes and effective methods for doing what we do. We have, years, decades of experiences to draw off of, not just from the people inside of our organizations that all have unique experiences, but all of the clients we've served, all of the, initiatives we've tested and tried and been able to, observe successes or failures. So, that collective knowledge, bringing that into an organization in a fractional capacity saves expense, saves cost, and, comparing to hiring that person on full time, but also brings so much experience and knowledge that it really does mitigate risk. I mean, it allows businesses to capitalize on the opportunity right in front of them and focus on the business and not solely focus in the business.
I think a great analogy here is, have you ever gone go-karting?
Absolutely.
It's a lot of fun.
And
Recently,
dangerous.
yes, I mean, got to have a little danger to have a little fun. And this past weekend, visiting my mother-in-law down in Florida, and we went go-karting. And wouldn't have a Formula One driver on a go-kart track, just as you shouldn't have a highly experienced executive doing things that are lower. Yeah. And that's what a lot of businesses do. Yeah. They don't have a need for a full-time chief executive, whatever, C-suite professional. Yep. And you give someone a 40-hour week, they're going to fill it.
Yeah, always.
And not always with the things they should be doing. And so the benefit of having fractional is not only the knowledge that they have across a lot more businesses, but also they're only doing what they're supposed to be doing. You're not wasting money on unproductive activities that could be done by another resource that's much more cost effective. You're not going to have your CFO doing bookkeeping, just as you're not going to have your CRO doing the digital SEO execution. That, like, this is really important, is as much money as possible should be going towards revenue generating activities. And that's what fractional, that's what part-time or other staffing models really enables. It's this creativity of saying the way business was is not the way business needs to be done now to move it forward. Globalization has completely changed the landscape. Remote has completely changed the landscape. Businesses need to get ahead. They need to innovate. They need to do better. And they can really get much better results with these new effective staffing models.
Awesome. Well, that really segues beautifully into my next question. I mean, with this future of work, Drew had some great examples of ways to save money, but Kristen, should you stop spending when a recession might be coming? Should you stop investing in marketing? Should you stop investing in those revenue generating activities to, as a way to save money when we're scared of the economy?
Great question. I think that is a knee-jerk response that so many businesses take. But, as we've been saying, there is a balance between being fiscally responsible and taking risks. During a recession, what you'll see is a lot of your competitors stop spending. They cut their budgets. A lot of your customers, their preferences and behaviors and spending change. They adapt. So there's so many dynamic things that are happening during a recession. And businesses that are looking to scale long-term and weather a recession need to be smart and need to take advantage of those situations. It's a great time to spend. You can, your ad budget goes so much farther. You can attract so many more new clients because your competitors aren't out there, spending what they were before. You can, improve your search rankings. You can, your cost per, acquiring a new customer can actually go down because you're out there engaging your audience, your potential customers, while no one else is, while your competitors are not doing that. So you cannot overlook that. It's also a great time to reassess who is our target customer, who is our ideal client. What does that profile look like? Knowing that your competitors are taking some defensive positions, can you go after new customer segments? Can you adapt and reach new audiences with a different message or a tweak on your own service offering? There's so much opportunity during a recession if you pay attention. Make sure you're paying close attention to your customers' preferences and behaviors. Wrap your arms around your existing customer base. A focus on retention and especially net retention when you have the opportunity to double down on your efforts to sell and expand into your additional service offerings, into additional, departments or teams within your customer bases. There's so much opportunity for growth right within your existing client base that needs to be paid attention to. Long term, that's going to help your business if you can continue to maximize that lifetime value of your client base. So there is so much opportunity during a recession if you're looking at the data, paying attention, finding those opportunities to invest smartly where you can have an impact and weather the storm and frame your business up to be able to scale rapidly, coming out of or even during a recession.
Excellent. Those are some great examples of, I think I heard a statistic recently that McDonald's stopped spending money during COVID, and Taco Bell increased their spending on marketing and took like a significant share of the market. It was like close to 15 to 20% of the fast food market, which is just crazy. So there's just an opportunity there to kind of overtake that market when your competitors may be pulling back their budgets a little bit. Awesome. So, okay, to the audience, I have one more question for the panelists. So now is the time to get in your Q&A. Or to the chat. All right. So Kristen and Drew, both of you, I'd like to ask, what are some examples of some cost-saving advice that you've given to your clients as fractional professionals or that you've taken yourself recently?
I think what I've seen is really looking at this. I don't forward so much. It's like hurting my back. So I think looking at this and saying the number one thing is, are you getting the result you intended? And that's been the best cost saving advice I've received as well as that I've given. It's too easy to just say, I'm going through the motion. I'm doing all the right things. Are you getting the result? Are your staff getting the result? If not, you're not doing the right things and going through the motions isn't going to get it done. And like, you have to reassess. And it's that constant discipline of looking at what was intended. How is it going? There's always going to be something that's working within that and something that isn't. And how do you consistently get better and iteratively improve? Like, that's what I've found to be the most important thing. Is people are generally one of the most expensive pieces of a business, but it's also one of its biggest assets. Mm-hmm. And so optimizing that and really working with your staff to make sure they understand what they're doing. How are they doing it? What does good look like? What's it going to take to get that outcome? That's one of the biggest areas to optimize spend, is to get the result.
Yeah, I couldn't agree with that more. And I think about the lens, of the revenue leader, where within an organization, how do you get focused? A lot of our clients are trying to be everything to everybody. And when that is your approach, you're never optimized. And so, one of the things we take a close look at is, who are the audiences we serve? And how does our profitability vary when we're serving those different audiences? Are some more expensive to acquire? Do some require more resources to service, et cetera? And I think it's really important for businesses to think about that and make sure they're as focused as possible. Oftentimes, dialing it down to focus on, one or two or three core audiences, whatever it is, can be that pathway to optimizing your profitability. It's less expensive to acquire those clients when you're really concentrated and focused on your acquisition efforts. And if you're focusing on the right audiences that bring more profitability to the organization, i.e., you're less costly to serve, and, where your product is a better fit overall and there's less customization, et cetera. Like, it's that focus and discipline on knowing who you are and who you are for, and consistently applying that mantra. I think it really is not about cost cutting. It is about optimizing. It is about focus and having that discipline. And I think when you talk about resources, you want everyone within your organization to know their purpose, know their mission, know how their success is measured. But it's also important that everyone within the organization is rowing in the same direction. As a business, you want to be clear about what your overall mission is and make sure all of those individuals are aligned and focused together. And that's where your optimization occurs.
Excellent. Well, thank you so much. We are almost at our time here. I like to keep it at 30 minutes. I know we have low attention spans here on Zoom lately. Any last words of wisdom for our audience before we sign off?
I think, don't be afraid to spend. Deploy capital. Make investments. Understand why you're making that investment. Don't be afraid to spend. A lot of people are pulling back, and Kristen, what you said is so true. Seeing this as an opportunity and not as a risk really changes the entire perspective. And coming from a place of abundance and not fear is really important.
I couldn't agree more. I mean, the example Lauren gave, there's countless examples of that. Businesses that saw a recession as an opportunity, acted, based on the data they were seeing, and took risk and focused on growth, profitable growth. But there is so much opportunity, and businesses should not be afraid to spend money and look for those opportunities that will set them up for rapid growth acceleration coming out of the recession.
All right, thanks so much. Well, thanks to the panelists, and thank you to the attendees for spending 30 minutes of your busy day with us. I have dropped both the LinkedIns for Focus Energy and House of Revenue into the chat. Everyone who is registered for the webinar today will get an email with the recording later. If you have anyone who is a fellow business leader who would benefit from this discussion, please send along, and don't be afraid to reach out to both Focus Energy and House of Revenue. Well, thanks so much to our speakers, and we'll see you next time at Profitability Engine Radio.